Each quarter of the fiscal year, ACCO Brands files financial statements that include information about income tax expenses and liabilities. Under U.S. Generally Accepted Accounting Principles, ASC 740-10 is the set of rules that governs how companies must recognize the impact of income taxes on those financial statements. Note that these rules are for income tax reporting only and do not apply to sales taxes, VAT, or payroll taxes. From time to time, we may face situations where the application of income tax law to a particular transaction is uncertain. ASC 740-10 provides companies with guidance on how to account for these uncertainties and disclose them in its financial statements. An uncertain tax position, or UTP, is a tax position taken on a previously filed return or one that it expects to take on a future return. The uncertainty lies in whether the tax authority will agree with our position. In that case, we are required to identify, evaluate, and measure those uncertain tax positions at the end of each quarterly reporting period. Typical examples of potentially uncertain tax positions are a decision to not file a tax return, a position related to transfer pricing, a decision to classify a transaction or an entity as tax-exempt, or characterizing income in such a way that it is excluded from being reported as income on the tax return. Disclosing these uncertainties provides for greater transparency of our financial data to public investors. We also must record a reserve to cover any potential tax liabilities and penalties should any of our tax positions be disallowed as part of an audit. When we believe we have a less than 50% chance of prevailing in a tax position under the scrutiny of an audit, we must report the position as a UTP. Where we determine we have a greater than 50% probability of a tax position being sustained based on its technical merits, we do not classify this as an uncertain tax position. In our evaluation of a UTP, we must assume that the taxing authority will examine the tax position and that they have all the facts that ACCO Brands is aware of. UTP evaluations are subjective by nature, so we rely on various approaches to make our determination about whether a tax position is uncertain or not. The first is to review past administrative practices. If we have been audited by a tax authority and they have accepted our tax position on a certain issue, we may decide that it is more likely than not that our position will be allowed and a reserve is not required. Where we do not have precedent to rely on, a second approach is to look at comparable cases of other companies that have received a ruling on a tax issue like ours. A third approach would be to call on local tax specialists to help us evaluate whether our tax position would be sustained based on the technical merits of our position and their experience with clients and local tax authorities. We are required to measure and disclose the amount of UTP exposure we have in the proper quarterly reporting period. If our UTP exposure is not included in the correct period, it will be identified by our public auditors as an out-of-period adjustment and may require us to disclose the adjustment and restate the prior period financial statements. The Financial Accounting Standards Board has provided Interpretation Number 48, also known as FIN 48, that addresses the accounting for UTPs. Each quarter, FIN 48 requires that we establish a reserve on the corporate books to include the estimated tax, penalty, and interest for each new UTP and a revaluation of all our existing UTPs. In some jurisdictions, we may be required to book a reserve for additional items such as legal fees and court costs. Once the reserve is established, we evaluate and monitor it quarterly and generally add incremental interest similar to a local tax assessment. We also monitor the UTP issue for possible adjustments based on changes in case law precedent, a change in the way taxing authorities assess the position, or a change in the status of a tax case or audit. When there is a settlement of an examination or audit that includes the UTP, we release the FIN 48 reserve. We may also do this if a tax case similar to ours is settled. More commonly, the reserve is no longer required when the statute of limitations expires on the tax period in which the UTP was taken. By retaining copies of tax return filings in our central tax office, we can monitor the timing of the reserve releases and verify they were made in the proper quarter. While the accounting and reporting of UTPs are managed by the corporate tax team, We rely on our local finance managers to help us identify potential issues so we can act in a timely manner. You are closer to the operations of the business and possess greater knowledge of the details. Each quarter, we send out a UTP questionnaire to gather information about these issues. Your timely and accurate responses to the questionnaires are a vital part of our reporting accuracy. Also note that you do not need to wait until the end of the quarter to alert us to something that you think might be a UTP. Making us aware of an issue early allows us more time to evaluate and measure potential uncertain tax positions.